Good morning, everyone. I want to talk a little bit today about the sort of history, past, present and potential future of what's been dimly called Robo Advice. Wealth Wizards have been in the market as what we like to think of as a true FinTech, in that we have our own advice permissions. We're a regulated business in the UK. But we couple that with world-leading technology and engineering. We work primarily B2B, so we tend to work with large high street banks, global banks, building societies, wealth businesses, to help them deliver technology solutions to their existing and hopefully new clients that they're seeking to engage with. And we also have a proposition, because we believe in eating our own lunch, that we support with our own advice permissions with about 60 corporate clients and about 70,000 employees. And that includes everything from sort of FTSE top 10 companies right the way down to organisations of sort of 150, 200 employees. And that's really sort of the bedrock of what we like to call our hybrid offering, but what probably in the dim distant past and maybe still in the current climate is called Robo Advice. But enough about Wealth Wizards. I want to talk a little bit about how we see as I said, the sort of past, present and future. So Robo Advice, as it's termed, was kind of the big, brave new world probably about 10, 11 years ago when we first entered the market from a technology FinTech perspective. And it was very much, I think, seen by some of the large sort of financial institutions that gave advice as build it and they will come. Mainly from a sort of an ISA savings perspective, possibly into things like pension top-ups and maybe sort of touching on retirement. But it seemed to, I think, with the best will in the world, kind of fall flat on its face. Mainly because I think that whole premise of build it and they will come really didn't stack up. People, in our experience, don't wake up in the morning and think, I need financial advice. The whole point is, if you look at the way that we engage with customers and how we like to be engaged with as consumers and customers, it doesn't necessarily work like that. It's about going through a process and the whole KYC piece and understanding what customers' needs are. So the build it and they will come kind of 6-7 years ago didn't really work. It was very hyped up in the media, like this is the brave new world. And I think certainly from our perspective as a FinTech provider, we're looking at servicing two sets of people really. One, we need to be very, very friendly with the advisors and the financial planners and the wealth businesses, because in our view, we're helping to support them to support their clients more effectively. But also we've got to make engaging customer end user propositions as well that are really going to take people on a journey where they feel comfortable. And you know, bearing in mind that I think everyone in the room would probably agree, we are so far behind in the wealth management markets around how we service customers digitally in every other aspect of our life, including things like coming here today and finding out about the summit and engaging with people. We're very used to using digital technology. But we've kind of created in wealth a rod for our own backs by mystifying it and making it very complex. And this is very, very complex this is, and you don't need to understand how it works because we're very, very clever people. And that's actually working against us. So the whole cost piece, as it says on the slide here, didn't really stack up either from a robo perspective. Some of the firms that even have been pretty successful in this space are still finding that the customer acquisition costs and long-term servicing costs, the amount of assets that have to be gained to achieve any sort of financial viability are very, very high. So that scale isn't quite there yet, mainly because that kind of journey hasn't sort of started the way that it needs to start with how are we really properly engaging with customers. So it tended to be, and tends to be, people that are already engaged with financial services and are already saving that have gone on to this method because they're more comfortable and they may be comfortable with a more digital proposition. So what's the COVID effect? I think we're all sick of talking about COVID. In fact, the last time I was at a summit was in January last year, when half the delegates and half the speakers didn't turn up, and it was up at the top of Park Lane, and we were told while we were there, oh, it's because of COVID, and we're like, what's COVID? What's happening? So yeah, this is we're that much further on now, and I think what we've learnt in the last year and a half, 2 years, it's been quite significant. I think an Altus report that I read recently said there's been something like 20 years of digital enhancement in the last year and a half, which is unsurprising. And that's mainly in the wealth space because, as I said, I think we're in catch-up mode. But really, I think one thing that the crisis has done has made people sort of understand that, right, I can't go and see people anymore. From a wealth perspective, from an advice perspective, I need to find other ways of achieving that. So we've kind of had the advisors that have gradually realised that, you know, some of the areas that are absolutely key in terms of getting face-to-face with people require technology. And that's largely been taken on board, and it's had to be taken on board. But I remember, you know, certainly from our perspective, talking to wealth businesses from a technology area, it actually still took 3 to 6 months for people to actually get to the point where they could start to talk to customers again, rather than by email. You know, which again was a significant time lapse. Everyone had laptops and were working from home, but actually getting to that point where hopefully you had the stability of Wi-Fi where you could engage with customers took quite a long time. And so we kind of reached that point where it's kind of become accepted now that this is the way forward. This is the way I'm going to need to engage with customers, because it may take a long time, if not forever, until people sort of come out and start seeing people face to face again. So that whole piece around how do we manage that transition and what technology do we use became really, really important, because as anyone that works in any advice or wealth businesses know, there's already probably about 25 systems that don't talk to each other. You have to rekey the data about 2 or 3 times already. For someone to come along and say, oh, I want to sell you another piece of technology that's going to automate this, probably isn't the sort of message that you wanted to hear, because it's adding to the problem rather than taking away from it. In an ideal world, I guess with what we've learned in the last couple of years, the head of advice would go to the CFO and say, right, we need to throw everything away we've invested in over the last 20 years, all the CRM systems, all the platforms, all the ATR tools, everything, and we're going to start again. Because actually, in about probably 18 months, it'll pay for itself and we'll be a much more streamlined, efficient business that will be able to scale. To which the CFO will say, some expletives probably, and ask you to go away. So that's probably not going to be the case. So advisors realised that sort of tailored advice was possible via video conferencing. The whole health wealth piece came to fruition, which is, I think, you know, the long term saying is something like, people will always want to talk to someone about their health and about financial advice. And we believe that's absolutely true. You can take the heavy lifting out of the process, but you can't go from one extreme to the other. If you're used to talking to an expert who hopefully you trust in from a trusted brand, to you're just going to talk to a computer or a robot now that's going to help you with your financial matters around things like key decisions like retirement and savings. So that kind of hybrid approach, which is kind of where I think the market has moved towards, of let's keep the advisors and the planners right at the centre of the customer's universe and make sure that they understand they're absolutely there, but let's take the heavy lifting out of the process and give people information around guidance and streamlined advice in a way that they're used to accessing that through applications like WhatsApp or even like an Amazon type experience or eBay, something like that. And we've found that that's worked extremely well, certainly on the engagement levels that we've found from a digital self-service approach to those 70,000 customers that we work with in Workplace. We've got something like, and we go through a process which is like an initial onboarding, which is a financial health check, the kind of conversation that an advisor or planner would typically have with a new customer, covering all of those bases around, how old are you working full or part-time, are you married, have you got dependent children, do you have a house, is it mortgaged or unmortgaged? How's your day-to-day spending? Are you saving? Are you familiar with savings? What's your affordability? Do you have money left over each month? To determine what are the areas that maybe we could help you on to get you on track for a better financial future. It works incredibly well, and it's been refined over 6 years, but we've got something like a 11% drop-off rate on those journeys now, and that's in Workplace, which traditionally has about a 1 to 2% engagement. So it's starting to really gain traction. And we're seeing the white label customers, the banks, building societies, wealth businesses that we work with now, are moving away from a more kind of like, how do we service our high net worth clients more efficiently, to how do we onboard new clients, the low net worth, that are going to be the high net worth clients of tomorrow. So Robo Advice now has really kind of started to moved more to this hybrid model of it's a trusted brand, maybe, so it's like the high street banks, the building societies, people that tend to see the custodians of their wealth picture and future and the trusted source of that. But having said that, even some of the high street banks have struggled with some of the classic robo type approach. Again, because it's that, well, if we just put it on our site, maybe people will come. You need to have that journey and that onboarding and get people to really understand and accept that they're going on a journey without having to give too much information up front, personal information. It's a kind of give and take approach. So I think coming back to the point of integration, it has been absolutely critical. So as all of us as providers, we've had to make sure that we have this open API approach because we're going to be part of an ecosystem. People aren't going to throw away all the technology, the CRM systems, the wealth management platforms, and all of the tooling that they've used in the past. So we need to be able to integrate with that, but make sure that the advisor's experience of using the technology and the customer's experience of onboarding and engaging is absolutely first rate. Exactly the same as you would expect from other aspects of your life that we've become used to. And really still the curators, the trusted custodians of that are probably going to be those big trusted brands, the banks and the wealth businesses that these customers have worked with for many years, and they've built up that trust. But still it's really important that you don't just rely on that. It's still got to be about how do we engage with these people, whether they're existing customers or new customers, how do we bring them on board so that they really understand what we're providing to them and that we're showing it's not just a generic process that one cap fits all, it's a personalised journey. We're finding out a little bit of information out about you. Then we're going to provide you with some information. Then hopefully you'll feel more comfortable giving us a little bit more information about you and your financial circumstances. And again, that trust starts to build and the journey continues. And that hyper-personalisation is absolutely critical because, as I keep saying, that's what it comes back to in every part of our lives. We really want to feel that this is something for us. So what does hybrid financial advice look like in the future? And importantly, what is it really? Because I think still from our view, it's about using technology where it's appropriate. And we don't like to use the term artificial intelligence. We know it sits there somewhere in the ether. We like to use the term intelligent automation at the moment because first of all, before you can have artificial intelligence, you need to have a pretty sort of sound data bank of, we've done this process so many times now that we can start to learn how it works and maybe make suggestions about how it could be improved. We're not there yet. We're still automating existing advice policies and the way that organisations give advice to customers and understanding that bank or pulling together that bank of data. So we think it's really, really key that we make sure that we use what we call intelligent automation. We're putting the advisor still at the absolute centre of the experience, whether they're talking to the customer directly or not, but the advisor and the advice policy is at the centre of the experience, and we're taking the heavy lifting out around things like report generations. As I'm talking to a customer now, I can be completing either by hand or voice recognition a suitability report. And taking sort of 8 hours out of that process, which the customer doesn't really understand and why it's so expensive. We're reducing full at-retirement journeys where the advisor is still at the centre of the journey from something like 35 to 40 hours for some of the advice businesses we're working with, down to less than 5 hours. And importantly, that 5 hours is the part where the advisor planner is talking to the customer about their dreams, their hopes, their aspirations. Everything else is what machines and technology does best. It's pulling the information in, it's analysing that information, it's getting quotations, it's starting to put together a framework or produce a suitability report, it's attitude to risk questionnaires, it's vulnerability, it's all of those areas that the machine does better than the human. But never forget that at the centre of all of that is, how do you really feel? What makes you excited about your future? What are you scared about? What are your hopes and fears? That's the bit that the advisors and the planners love doing as well. So it's really important to have that at the centre. But as the images show here, we're kind of caught between this sort of Iron Man type approach, which a couple of speakers spoke about earlier, of the terror of the future of intelligent automation, and Robocop, where suddenly the machine turns on you and starts giving terrible advice or blowing your head off. and that kind of protection from yourself, which is the kitten on the right-hand side, which is get away. You need that for your future. Leave it alone. Leave it alone. And we're kind of in that process at the moment. So at the moment, I think the pandemic has definitely highlighted for us the need for people do need affordable guidance and advice. You know, we've got a massive advice gap. We've got a huge savings gap. There's still only about 27,000 advisors in the UK. And there's something like about 7 million people that at least that need advice. Probably another 15 million that could do with a lot of guidance and potential advice and help. Those advisors aren't going to service that because we've got this whole real, you know, financial issue and commercial viability issue of we can't afford to talk to you. So that hybrid approach is really important. Use the technology to onboard customers in the right way, the way that they're used to being talked to digitally. At the appropriate time, engage with them personally. And that might be right at the beginning, but it might be never, because some people don't want to talk to someone. Some people just want to get on with it. If every time that you made an Amazon purchase, someone picked up a phone halfway through and went, "Hi, how are you today? How can I help you? What are you doing? What are your hopes? What are your dreams?" You'd be like, "Go away. I just want to buy a book." So it's about making sure that the right media and mediums are available to everyone, but it's the customer's choice. Or it might be that someone, you know, just says, "I've got a really complex situation here and I need to talk to someone." So that hybrid approach really manages that. Keep the advisor, the advice business at the centre of everything, but service people and take them on an onboarding journey and a continuous journey that works for them. And we've developed digital chatbot interface. We've got a number of different mediums. That tends to be the most popular. So, you know, it's actually sort of asking you questions that are relevant and giving you multiple choice answers or allowing you to freeform type or just say, again, like I said, I want to talk to someone. I know what I want to do. I want some information about retirement. I'm going to retire in 10 years. What are my options? Taking all of that sort of heavy lifting off of people and giving the information as it's required. So I think the future from our perspective is very much about how do we continue that journey and make sure that we're managing all of these different sort of areas, both from a customer perspective, but also from an advice business's perspective about, so, you know, there's narrowing that advice gap to fully sign up, you know, the whole to the digital economy. So how can I access my wealth information in the same way that I go online and access my online banking information? And we think that's really, really critical. And then managing that through the, you know, low net worth clients, onboard them in the way you want to be onboarded, ask the right questions, not too invasive to start with. Don't start with, give me your email address, tell me how much money you've got, and tell me how much your disposable income is, because you'll turn people off. Find out a little bit of information high level at first, and then gradually, as you're giving information back, in the same way if you think of any other journey that we use successfully digitally in other aspects of our lives, I'm going to feel more comfortable about giving you more information then. So it's about managing that really effectively. We need to obviously serve more complex cases with the hybrid, so using the advice expertise in the business where it's absolutely appropriate and where an advisor's expertise is needed for those more complex areas. So again, take the heavy lifting out of the advice process, free the advisors up to do what they do best, talking to customers, understanding their needs and objectives, their hopes and dreams. And making that applicable across the board of all of these areas. Reduce administration, increase compliance. All advice businesses have said to us that we work with during the pandemic and prior to that, we want to scale our business, but we don't want to scale the people that work in our business. So take the heavy lifting out, which is great, but make sure that your advice policy and your investment policies are embedded in the technology, in the algorithms, to make sure that every piece of advice that goes through as you scale your business is like advice that's been given by your best advisor on their best day. And it's a great training tool as well for new advisors coming in, which is again an issue, getting people to come into advice. I want to leave you with one perspective that is my kind of favourite analogy, I guess, which is Deep Blue, which was the IBM technology that kind of learned how to play chess. And I kind of feel that that's where we are at the moment. And I think it launched in 1985, Deep Blue. I think it was called Deep Thought to start with before it became Deep Blue. And it learned how to play chess. And it learned the basics, almost like out of a textbook. How does everyone play chess today? And we're kind of doing that now in wealth. How do we give advice at the moment? How have we always given advice? Then, in 1996, it played Garry Kasparov, who was the world chess champion, and it lost. Because Garry Kasparov still had that, I know what you're doing here, I'm an expert advisor, I know this is my world you're in now, you're not going to beat me. And he beat it 4-2. So it won 2 games, but that was great, beat it 4-2. A year later, taking that learning from Garry Kasparov and many other chess leaders, the technology came back and said, we want to play you again. Because we've learned not just how to play by the textbook, we've learned how you play chess, how you give advice, if you like, in the analogy. And it beat Garry Kasparov. I think it was 4.5, 2.5. And Garry Kasparov's reaction was, IBM cheated. And that's kind of where we are with the advisors at the moment, which is, it can't replace me, I'm better than it. It doesn't want to replace you, it wants to work with you to make you the best advisor you can be for your customers. So that's quite a useful analogy. Hope that's been useful. Thanks very much for your time and enjoy the rest of your day.